traders, back to another recap. So in this recap, I'll talk about how I had a $12,000 loss on AUDJPY, and also how am I still holding gold, and what's my overall thought process on the current market, and why am I abandoning some of my game plan but sticking to some. So if you look at the entire market, let's not talk about my losses and also the gold that I'm still holding right now. Let's talk about this Friday spike. So last Friday we had some Trump speech, and that was really causing some massive spike, lots of volatility in the market. So on our Sunday meeting inside our trade club, I then discussed about how I see news spike logically. So whenever majority of you see all these news spike, you always have the quick impression or quick judgment of, oh, we're spiking up, that's why we're looking for long. If you look at gold, for example, I believe 90% of traders, once they start seeing the spike, they will immediately think, oh, I'm looking to buy into this because it's looking pretty strong. And now let's go to one important point, and it's an entire lesson inside our trade club, which is news spike could be irrational. So that's number one thing. Most of the time, the news spike that you see, they are bound to be digested. Digested means after you see news spike price up, most of the time will be consumed, but not all the time. It's very depending on different factor. Whether after the news spike, do we have multiple candles showing that we're really holding above support? For example, after the news spike, do we have the actual follow through? Because if let's say after news spike up, all price did is we consolidate, then oh, maybe we're really holding strong. But that's one side of the story. But after news spike, if you start seeing price action printing things like a rollover to the downside, that means we actually can't hold above a level after it does a BOS. Let's say here, price did a break of structure above the previous resistance, now pick up support. But if let's say after the news, all price did was chop, and it dropped below, that is giving you an opportunity to actually short into the market, anticipating a potential fake spike. So that's one thing. So focusing on studying the follow through. So don't really be bothered about, oh, that one spike. Let me tell you, one thing that I always teach is one candle does not mean anything. One big candle, whether if it's bullish, whether if it's bearish, they don't mean anything. But when multiple candles are showing strength, let's say breaking resistance, showing weakness, breaking below support, this means a lot. And that's why I personally, if you've been a follower on my channel, if you watch most of my videos, then you will know that I always say candlestick pattern is a trash. I care more about is a trash. I care more about price responses. So price response is also an important term that I always use, because I care more about price response to market structure, to price levels. So one candle hitting or rejecting a resistance does not mean anything, because very often we can have a big spike attempting to break a resistance just like this, and what happened next is we paused, we stopped, and we came back. So-called we rolled over. The same thing. Now if you have a look at pound dollar, is very similar. So if you look at pound dollar, we had some big spike to the upside last Friday. If you look at our, let me show you. If you look at my Telegram here, there's no hindsight. If you go back to 19, we actually shorted, scroll down, pound dollar. Hey, sorry, let me scroll again. Forgot when was it. Yeah, we shorted on pound dollar, and it was exactly at 135.24. And besides pound dollar, you see, we also shorted gold and all. But anyway, that too many messages. Sorry, we are very active inside the channel. But let's move on back to the chart. If we go back to the chart, then you can see that based on what I showed you just now, we talk about shorting pound dollar at this very simple break and retest level at 135.23. We shorted, and most of us closed it for 4 to 5R. And after on Friday, we have some massive spike. Do we care about the spike? We don't. What happened was we wait for price to react to the level, and guess what? We dropped back below. Some of our traders actually re-shorted back into 135.23 because that is the power of sticking to your winner. The same thing goes to gold. So what happened was last week we shorted gold around 33.69 and we were able to hold it down. But unfortunately some of us get spiked out, but we still re-shorted and closed it here for 2R. Same thing if you go back to our Telegram setups channel, then you can see that last Friday, go back, you see we have another reshort here. So again, no hindsight, we talked about this yesterday. So yesterday sell limit ordered on gold was tapped. Then if you go back to last week, see that we had a 2R short on gold. Yeah, we closed it for 2R. And look at our entry level. Our entry level was at 33.44. And before that, we also shorted gold as well. But unfortunately, we got trailed out. But if you look at the current price action on gold again, price actually go all the way back after the spike. We even tried to break above our initial entry level at 33.69. But guess what? We failed and we still come back below. So gold position, I'm still holding on to this. The main reason why I shorted gold, you can also go back to some of my recent recap, is because gold has been on a range. For the past 3 months since late April all the way until now, I've made over 200 over 1,000 on just shorting gold into the range. That's it. So every time, let me just tell you how simple it is. Every time when golds fake out this 33.69, come back, I'll short. If it breaks below 33.45, I'll short. Go back, I'm not doing anything, come back below, I'm shorting here. Breaking below, I'm shorting again. Come back, drop below, I short. Go up, drop below, I short. So pretty much, look at the similarity. If you know exactly what you're doing, this is what's going to happen. You're going to make money because you know exactly what the market is doing. And that's why I always emphasize on the power of education and the power of knowledge. If you look at me, okay, if you're someone who's been following my channel and you think, oh, Neo is such a good trader, he knows, he's making 6 figures a trade, he's making 500. My biggest trade was 500, almost $500,000. It was 498,000 on dollar yen short. We are not, it is not by luck that I can make this kind of figure. It is through years of trial and error, and most importantly, I know what I'm looking for. Most traders goes into the market with the mentality of maybe. No, there is no second guessing. If you look at the way I've been constructing my education across on my YouTube channel, also on my personal private trading community, which is the 1%ers Trade Club, we have over 400 plus traders. But how am I able to keep the education so consistent? And we have transformed so many good traders, not because we have some secret pill, but because we focus on the mindset of get the work done, put in the effort, do your back test, most importantly, do your forward test, refine your performance, refine your edge. That's how you become a better trader. So it is not by luck, it is through a lot of skill and patience. And every time when I see people talk about the importance of psychology, it's a trash. If you're a trader focusing on trading psychology, you're having wishful thinking. You're not even a trader. You're just praying for the trade to become good. And if you look at the way I trade, if you look at this Aussie trade, I got stopped out. I got stopped out on this. It was based on the mid to long term game plan. If you go, I'm not sure if I posted a recap, but yeah, actually I made about 4.6 hours shorting Aussie yen, and that was also a beautiful trade. I shorted from here all the way down, and that's why this time around when price pulled back into 95.6, I want to stick to the BNR short. I'm sticking to my initial plan. I'm staying focused, but unfortunately I got stopped out, but does not matter because on this trade I've made 50, 60k or 70k. I actually don't know. I don't really care too much about a P&L, very honestly. And this time when it come back, I risk about $12,000 and I got stopped out. Held it on Friday and I got stopped out. And what's more important is, again, if you look at the way I've been doing things, is go down. After I got stopped out on Aussie yen, scroll up again. So got stopped out on Aussie yen last night. Won't be looking for any re-entry on Aussie yen now, as price seems like it's holding above 95.58. It's always very confident. It's a quick decision making process. When I got stopped out, I walked away. I don't sit there thinking about, oh, how can I go back in, how can I get emotional. And if you look at this, so shorter than Aussie yen, one got closed out for about 5 hours and still holding another, still looking for a re-entry. Called everything in real time. And again, the main reason why I'm able to do this, calling things in real time, no hindsight, is because I know what I'm doing. I know exactly what I'm looking for. And the way I trade the market is extremely mechanical. Everything, every possible scenarios, we have a rules to fix it. We have the rules just to solve this specific problem, this specific aspect. That's why when you have consistent trade management model, consistent entry model across all of your patterns, all of your strategy, you become a very consistent trader. So that's pretty much it for the recap. I actually tried to talk a bit on education as well, especially sharing how do I manage my expectation, how I deal with new spike, blah blah blah. So long story short, I lost money on this Aussie yen short, lost about $12,000. On this gold trade, I'm risking about 20k plus. I think it's to about $22,000. And yeah, right now it's running for close to 30k, and we'll see how it goes. So yeah, if you like it, please don't forget to like, share, subscribe, and I'll talk to you later. Bye bye.